Welcome to another episode of the Trees and Lines podcast. On this two-part episode, we talk with Anna Marie Will and Eric Brown of SMUD. We talk about how utilities approach acquiring insurance, how SMUD has relied on its vegetation management subject matter experts, and what others need to consider when structuring their insurance plans. Have a listen. Hope you enjoy. Eric, Anna Marie, thank you for agreeing to be back on our podcast. Eric, you're a returning guest, so as Tej said, almost one of the team.
Yeah,
and Anna Marie, I appreciate your joining us.
Absolutely.
Thank you very much.
Absolutely. Why don't we start off, Eric? Maybe you could reintroduce yourself quickly, and then we'll ask Anna Marie. Tell us a little bit about yourself, your background, and
Sure.
Then we'll get started.
Absolutely. Sounds good. Thank you all again, as normal, for the opportunity. Super grateful for the chance to share. I think we've got actually a great story. My background is in the utility vegetation management space. Just shy of 29 years in the UVM industry, both at investor-owned utilities and now publicly owned utilities. I've been at SMUD just shy of 9 years, all in the vegetation management space. I've had some awesome opportunities to work with some incredible consultants that I've learned a lot from. In addition to that, a lot of contractors, a lot of peers and colleagues across North America have a reasonably good peer network and participate in a lot of different industry groups, past president of the Utility Arborists Association, and then deeply involved in the North American Transmission Forum and have been since 2010. So that's a little bit about me. Anna Marie, share a little about yourself.
Sure. I am the insurance program manager for SMUD. I've been with the organization for about 8 years. Prior to that, I worked in various public entity insurance roles, whether it was risk management or underwriting, and have worked with what's called joint powers insurance authorities, where public agencies can come together to pool their risks, and did the underwriting and risk management for them. So I have about 20 years of risk management insurance experience, and came to SMUD. Didn't know the utility industry, so spent some time learning that, and have been able to put my experience to use, hopefully towards SMUD's benefit.
Thank you both for joining us. Obviously, Eric, we've known each other for some time and love having you join us again multiple times. You're a veteran now of the podcast. Anna Marie, the subject that we're going to poke around today is of obviously not just great interest to us, but pretty much to the market. It's the industry has got a big spotlight on it, and insurance is a big topic. And I think you'll be our first guest with that depth and background. So really, really excited to have a chat with you today. So.
Absolutely. Happy to share, and happy to tell you, why wildfire has become such a big topic for the insurance industry. Because for a long time, it was just one of those add-in coverages that people didn't really, it wasn't a high risk, high severity type of event. And so, it was just tossed into the premium you were going to pay for your general liability. But it is a much bigger topic now, whether you are an industry or a private homeowner or a business owner. Just the cost of that coverage has become a major operational expense.
Has it changed much in the 8 years you've been there?
Oh, absolutely. Absolutely. As I said, it was, just one of those coverages that was there prior to about 2018. The 2018 wildfire year was really when things turned around. That was, to that point, the biggest and most severe wildfire year California had seen. We burned something like, it was almost 2 million acres, I think, of land in California that had burned, and about almost 26 or 27 billion worth of damage for the insurance industry. And that got a lot of attention. So suddenly this risk that folks had not necessarily been rating was becoming a high exposure, high risk type of incident. And so, for instance, SMUD's cost of insurance went from $2 million in that in that 2017 year to $8 million in the 2018 year. So it was a huge difference to our budget.
Anna Marie, do you think we're at a place, and I know we're going to hop around here, but like when it comes to wildfire insurance, it's obviously now at a place where it's affecting people's ability, companies' ability to do business, right? And that's
Yes.
creating a different type of problem, because the cost of now doing business in California is almost becoming untenable. In some cases, like if you're even in the business, you can't even get insurance in some, like people aren't even willing to underwrite. So where are we in that part of the world? Like, is there some recognition by the underwriters to say, okay, if we don't figure this out, or we don't start delineating the different types of players, well, this is a clearing company and this is an inspection company, otherwise like the utilities are going to have a very difficult time figuring this out and managing a cost that doesn't ultimately trickle down to the ratepayer.
It's a tough space, and the insurance companies have not delineated this by industry type.
Okay.
They, other than looking at something large like a utility, which tends to buy millions of dollars worth of coverage versus a smaller industry that might only be buying $1 million or $2 million. So very different purchasing practices. But what they are doing, and it's just starting to happen because we're in this space where it's, as you said, people cannot get the insurance. They are starting to understand that geographies and terrains are different in different areas. The wildfire mapping has been very kind of just painting a broad brush of, California is just an area that's going to burn. But Southern California is uniquely different from Northern California. And upper Northern California is very different from mid-Northern California. And even here in Sacramento, you can go, 3 or 4 miles and you have a very different wildfire hazard area. So they are starting to recognize this, but it's very slow. So the work that Eric is doing is critical to helping them understand that. Understanding that not only is the terrain different, but the work that we're doing really changes that risk profile. So it's very critical to be able to quantify that risk, which is something I think Eric will talk a little bit more about, and be able to talk about what is your exposure from a terrain, from a weather, and from the vegetation that's out there. Because all of that makes a difference. If you've got low-lying vegetation with no fuel ladders and no treetops that are going to create the fire, it's a different story than if you have all of that forestation and really high-packed forestation.
Right.
So one of the things Eric will talk about, I'm sure, is a shaded fuel break where you don't have that risk. So just being able to quantify and really understand your area and your exposures and being able to relate those to the insurance company is going to be helpful. But another issue for California is our strict liability policy, and that can sometimes be very unique to the utility, meaning whether we are negligent or not, if our equipment is involved in that ignition, we are responsible for all of the damages from that fire. So that puts California in a unique spot because we are one of those few states.
So it seems unusual that you reached out to Eric. I can't think of too many times the subject matter experts engaged, at least not the veg management one. How'd that come about?
SMUD has a very unique structure in that our chief financial officer is in a position to also oversee risk. So that person had visibility into what was happening in our risk department, just in terms of the way insurance was impacting our budget, as well as what was going on in the field. What were Eric and some of our other SMEs, subject matter experts, doing out there to harden assets, to reduce risk, and even just to quantify the risks that we were dealing with. And so at the time, our CFO was Jennifer Davidson. She put us all together and she said, what are we going to do here? We cannot continue to manage budgets that just exponentially get bigger. As I mentioned, we went from a $2 million spend to an $8 million spend, and that literally kept almost doubling year over year. And so the idea was we needed to find better uses of our money. So if we could spend a little more on vegetation management and reduce that risk, maybe buy a little less insurance, it was a better trade-off. And so we worked very closely together with what can we do with our experts. And if we're investing in what SMUD is doing, these risk reduction efforts, maybe we don't need as much insurance, whether it's at the self-insured level before the insurance kicks in or the limit at the top. So really looking at how do we structure this and how do we effectively deploy the resources that we have, either from a risk transfer standpoint or a risk management and mitigation standpoint.
There's a couple of things that that resonated with me as you all have been chatting here. One of them in particular is, which I think is going to continue to increase, is the affordability component. I think as most utilities have been foundational with safety and reliability as pillars or foundations of everything they do every day, I truly think that there's an overarching connectivity of affordability to both of those items. Not saying that either one of those are going to be softened in any fashion, but affordability is almost in a neck and neck race between safety and reliability across North America in the utility space. And insurance premiums are driving a huge challenge. Tej, you kind of talked about a little about what is happening out west, which is uninsurability, which has happened to private landowners for 4 or 5 years now.
Yeah.
Utilities are not immune to that. I know one for certain utility in California that's uninsurable. They're uninsurable in any space under any cost matrix. The underwriters aren't interested in insuring them. Their risk profile is too heavy, and they've had an incident in the recent past, and it's driving those decisions.
So is then the only option to self-insure? What are the workarounds for the utility or a homeowner? Because that becomes very problematic for the state. Obviously, the economic status of California is not fantastic. This is only going to add to the complexity and probably the continued migration of residents to leave California. Right?
Yeah, I mean, I think both in the utility space and in the private sector or private landowner space, the challenge is the dollars are being funneled into areas that are not driving proactive risk reduction. They aren't reducing risk. Yes, you're paying your premiums. Yes, you have insurance, but it's actually not doing work on the ground. You're not executing risk reduction on your portfolio, on your 5 acres, on your 5,000 acres, around your assets if you're an electric utility. And I think really, though, everyone is in some level of peril at that point, especially a utility that is uninsurable. You're on a razor's edge of potentially bankruptcy of a small to medium size or obviously large catastrophic event when you don't have insurance. But It also puts the entire community that you're providing power to as your duty and obligation at peril, at risk. And we've got another 2 months worth of fire season here. And while fire season is one component of this, there are a number of other things that we also need to consider that will benefit from doing wildfire risk reduction. Forest health improvements will also drive reliability benefents. Tree failures happen, whether that be a tree branch, an entire tree, or portions thereof. They don't always fail in summertime. They don't always fail during summer weather events. A lot of them fail during winter weather events, which puts the customers in challenge with reliability. So you're providing leverage benefits when you're doing proactive fuels reduction and forest health work. It's truly driving reliability benefits and obviously community level safety benefits as well.
So, Eric, I think one of your things has been really focusing on reducing exposure. A lot of talk about hazard tree identification, mitigation, or You go a little bit beyond that.
Yeah, we've actually have, in one of the previous podcasts, talked a little bit about the quantification of risk, and in our particular footprint and scenario, our CFO and CRO, Chief Risk Officer, all in one position, which is really unique, holding all the risk and conditions out there while making financial decisions is a unique scenario across the utility, and that provided us a platform to truly identify what our total risk is. And it's not just in particular hazardous tree conditions. Many of these are danger tree conditions, so perfectly green, perfectly healthy tree that can fail into a conductor or bring a wire down, cause an outage, potentially cause an ignition. And if you look at some of the events that have happened in the past decade, many of those conditions are conditions that are happening outside easements, which means utilities are doing a generally good job of work in their easement. But the failures are happening just outside or on the edge of those easement portions. And that's what SMUD ultimately ended up doing. While we quantified our risk with a highly accurate remote sensing technology that is easily understood now in the underwriter market, it's certainly understood in the litigating market. Everybody is getting really, really familiar with traditional remote sensing technology to quantify risk, and it has extreme accuracies. And in that particular scenario, that's your baseline, that's your foundation of truly being able to say, hey, here is what the resource needs are. Dollars, timeline, bodies, the fundamental project management components, scope, schedule, and budget of here's what our risk is, and here's how we need to go about being proactive, taking bold steps, things that we haven't done before, and are pretty forward-thinking. Yes, they are, in some cases, well outside our easement. But SMUD's portfolio is unique as well. In the area that we're doing much of this work, near Lake Tahoe is probably the easiest geographic way to pinpoint it, it's an extreme and very high fire threat. Most of it's wildland or wildland-urban interface conditions out there. And having some platform to truly understand how many tree conditions are out there was what we used. I mean, that remote sensing technology was our foundation that we built off of, and we started the conversations early. Phil, as you pointed out, yes, having an SME sitting with the underwriters in Bermuda or Lloyd's of London or other spaces provides huge value for them. You have a comfort with your expertise that you can share real-world operational actions that you're taking out there. And the company decided that we needed to do something different. We needed to truly reduce our risk. And that meant many trees outside of our right-of-way or outside of our easement were removed in collaboration with private landowners and federal landowners.
Thanks, Eric. That was actually very, very thoughtfully kind of laid out. Anna Marie, I wanted to explore one thing. We run businesses that are also impacted by this conversation, and this is now something that's happening across the country, not just fires, storms, whatever you want to call it, any kind of event-driven thing that can impact the footprint of a utility. I feel like if I'm summarizing what Eric is saying is, hey, if you're taking a proactive step to show risk reduction in your footprint, the insurance company, there's a dialogue to be had. Is that true?
It is true, and
Okay.
the insurance carriers are starting to understand that.
Okay.
Wildfire risk, as I said, was really not well understood even 5-6 years ago. It just didn't have the frequency and severity to catch attention. That all changed. As I mentioned, 2018, the 2021, 22 fire years, really impactful for the industry. So the models that they're using to model potential scenarios have improved, and carriers are starting to get more sophisticated. And that really is thanks to the effort of Eric and others in his industry that are bringing the education out there. And so underwriters are starting to understand that it's not just this fire map that the CPUC has put out or any public utility commission. that indicates what they need to focus on. It's the knowledge and expertise of these utility folks like me, like Eric, where we can go in and talk about exactly what our terrain looks like. And it really is, a picture is worth, $1 million at this point or more, because when we can bring these kinds of pictures, as Eric's talking to our underwriters, and he can say, this is what our profile looked like in 2019, and we have substantially improved that terrain to remove those risks. That right there speaks volumes about what we have done in our area. But it is so important, as Eric mentioned, to bring that information to them, to be able to show them we understand this risk, we understand this territory. And having someone like Eric or his counterpart have that conversation and bring the passion, bring the experience to those individuals really matters. That relationship with your underwriters, for them to feel like you are bringing them both the good and the bad. So like I said, for Eric to show in 2019, we had a bigger exposure than we do now. They can see that not only are we looking to transfer that risk, but we are willing to put our dollars into that risk and improve it. And so it's important that when you're building what we call a tower of insurance, that you are willing to take some of that risk. So you might ask a carrier to take the first 20 million or so, but you're willing to take the next 10 million. So if they're seeing that you're willing to take that risk on yourself, that you are,
risk,
that you're investing in that you are taking part in that, and you're taking responsibility for what you're managing. That is key.
So as you've convinced them, or you work with them to see that you have plans, mitigation plans, whatever, is the number of carriers or the competition for your business, is that changing?
Oh, good question.
Absolutely. Yeah. So a lot of, as you know, a lot of carriers are leaving the wildfire space. They're leaving some of the convective storm space. If they're not leaving, they're sublimating it, meaning they won't pay for a full loss, or they're just taking some of that exposure out, which is called excluding certain perils. So the market continues to change in that regard. But what we are finding is that folks are coming back, and some of that has to do with the sophistication of the models, and some of it has to do with the exposure that you're bringing to the market. SMUD has been very fortunate in that we have a really good underwriting presentation. We really describe our territory. We have experts like Eric that will join us in these conversations, and we have been able to maintain capacity where others did not. We were able to build out our tower year after year. Some years we had to take on more of that exposure. This past year, with all of the work that Eric was able to demonstrate, we actually had more what's called capacity. So we were able to buy more insurance than we have in the past. They were really beneficial rates. We didn't see a lot of increases, especially in the excess layers. And we actually had more than we could buy, which is not something that we've seen. And we are one of the few utilities that had those offers. And we do have other carriers coming into the market that want to meet with us. And it's very rare to have a carrier ask to meet with you. But this is the year we did that. So very exciting for our program.
Anna Marie, obviously, I've gotten to know Eric over the years, and so there's obviously a relationship and a correlation to very transparent risk mitigating strategies that you guys have been able to parlay and have a constructive dialogue with your providers. If I multiplied your footprint by a factor of 100, right? Do you think you would have? Do you think that you would have the same success? I know it's a bit of a theoretical question, but I'm just wondering how much of that is the fact that you can get your arms around your footprint because you're smaller than, let's say, one of your peer utilities south and north.
Yeah, I do agree that our size and the ability to really quantify that risk helps us. I don't know if we went at 100x of our current that we would be able to provide the detailed information on that exposure that we do now. My approach to that would probably be to break that up, what we call ventilate that exposure, and look at separate towers for separate areas. So that if you had, X counties, you could put that into one tower and put the other counties into another tower.
How much do you think, so thank you, that's very honest. But like how much now do you think then that the insurance industry and the cost of everything going up is going to have like kind of state level decision makers look at larger utilities and say, look, we probably need to start breaking apart big utilities so that things can be run at maybe a SMUD level and risk is more digestible so that we have organizations that can control what's going on first. You know what I mean? So do you see that this is a input into a path like that or not really?
I don't see that being a state level discussion, honestly. I think what's going to happen is you'll see a lot more pressure on the insurance commission, the insurance oversight authorities, because I think the states are looking at it more as an insurance problem, not an industry or an organizational problem.
Got it. Yeah.
Because we in California, we have, especially up towards the Sierra, have business owners like restaurants where they are seeing their insurance costs outpacing any other operational expense, and it's driving them out of business. The state is not looking at that as a business problem. They're looking at that as an insurance problem, and the insurance industry needs to solve it.
That's it for this episode of Trees and Lines, brought to you by Iapetus Holdings. If you like the show, please give us a 5-star rating on Apple or Spotify. If you have any questions or comments on any of our episodes or ideas for topics or guests, we'd love to hear from you. Please contact us at treesandlines@iapetusllc.com. We'll chat with you soon.